And so it's really time for me now to formally welcome you to this event. We're really excited to be sharing with you the key proposals in the second exposure draft of INPAG, International Non-Profit Accounting Guidance, so that you can give us your feedback. My name's Tim Boyes-Watson, and I'm the chair of the Practitioners Advisory Group that's part of IFR for NPO. I'm based in the UK. So joining me today, I'm delighted to welcome Karen Sanderson, who's the INPAG Technical Director at CIPFA, the Chartered Institute of Public Finance and Accountancy. And Karen works closely with me and Sam, and her role is really to develop all the technical aspects of the guidance, which is also informed by the input we get from stakeholders like you. And we're also joined by Phil and Nandita, also from CIPFA, who are also involved in the technical drafting team. So when you ask your questions, any one of them might be answering from a technical perspective. Moving on to the next slide. So you probably may know this if you've been to one of these before, that this is part of a series of webinars. And you can see we're getting to the end of that series. This is the last one. Next slide. So I hope you've really got the message that we're really keen to hear your thoughts and feedback. That's why we hold these webinars, and there's also the consultation is open, and we're desperate to get your responses. The perspective of people working in the sector, as well as donors, auditors, and the accounting profession around the world, are essential to making sure this guidance is relevant, user-friendly, credible, and fit for purpose, so that it can be widely adopted when it's finished in 2025. This project started in 2019. We've already received input from experts and advisors to reach this point. And that's why we can now share that second exposure draft with you. The purpose of today's one is to explain our proposals and for you to have the opportunity to ask questions and seek clarifications on the proposals being made, as well as share your comments, opinions, and feedback. And at the end of the webinar, we'll also tell you how to submit a formal response to the consultation. Next slide, please. So the flow for today's session is shown on this slide. We've already finished the introduction, and now we're going to do something a little bit unusual. We're going to watch a video on YouTube that we prepared in advance to explain the proposals. It's about 10 minutes, roughly, and we'll shortly share a link to a playlist that has the same video in English, French, and Spanish. That way, everyone can watch the video in their preferred language. Please note that there may be an error just when you start, that the title may be wrong, but don't worry, it will soon get going and you'll be in the right place. So Brian is putting the right link in the chat here for English, French, or Spanish. As you watch the video, think about how the proposals apply in situations that you're familiar with. Please type any questions into the chat as you go along. Don't wait, put them straight in the chat, and we can be thinking about your questions as you're finishing the video. And again, use the Zoom chat to type questions in English and the Microsoft Translator app for questions in French and Spanish. After the video is finished, we'll be here to respond to your questions, or the ones that we can handle. And we may not get to everybody's questions. It really just depends how many that come in. Okay, so next slide. This is now time for you all to go away and watch the video on YouTube, and you can see the links in the chat now. Hope you enjoy it. See you soon. Start with a poll, just to get us going, if you like, and then we can go on to more detailed questions after that. So there's going to be a poll showing in just a second when Brian posts it, and it'd be lovely to get your responses to that poll as to shape how we're going to handle questions. So hopefully you can see that on your screen. Really appreciate everybody doing the poll. It's really, we continue to gather this information about whether NPOs make any share-based payments, and I'm seeing 20 out of 22 so far have said no, which actually that's my experience as well. In general, I see you support the cross-cutting terminology changes. Also starting to get some questions in the chat. Super helpful. Thank you. So I think possibly we could end the poll there. Karen, what do you think?
Yeah, no, that looks good. That's a very good response rate. So yeah, no, that'd be fabulous.
Brian, are you going to share the results, or is that something I do? There we go. Should be able to see the results there now.
So it'd just be good to take a moment, just have a quick look at these. So I think as Tim was saying, the vast majority of you saying that you don't know of any NPOs that make share-based payments, 85% of you. But there are some there. So maybe as we follow up after this webinar, good to know a bit more about those kinds of arrangements that are in place so that we can make sure we've got appropriate guidance. In terms of the terminology, most people finding that the changes are generally good. Some people not so keen on the changing the entity to NPO. So I think generally kind of support for the changes that we've made. And then the final question about taking share-based payments and profit sharing from employee benefits and whether that will create any challenges. Again, so just less than half of you are saying no challenges. But there's about 33, about a third of you saying that will create a challenge of some description. Again, that's something that we would like to hear more about, either through your responses to the consultation or any kind of follow-up that you'd like to provide. So that feedback is really helpful for us in terms of taking the project forward. So thank you for those poll responses. That's very helpful.
Great. So we're already getting some questions and also some comments in the chat. That's really what we want to move on to now. So please I'd love to hear as many questions as possible from all of you. Just reminding you, if you're using English, you can put it straight into the Zoom chat. If you want to, if you're non-English, then please use the Microsoft Translator app. Hopefully the translations will be accurate enough, but we've generally found them to be good enough. Karen, do you want to
I think if you can select the questions you'd like me to respond to,
great, yeah.
Tim, that would be great.
So I think the first one from Anwar is more of a comment about appreciating that we're trying to look at this issue of taxation, which is actually a very, very complex issue. So we'll do what we can on that, but a lot of that has to be resolved at jurisdiction level. If we could pick up the question from David about what do we mean by financial instruments and what's the scope of that?
So I think if I can just say one thing to start with, just really to contextualize this. We had to make some hard choices at the beginning of this project about where we were going to spend our time and resource, because we had a finite amount of resource, and we did want to produce something relatively quickly, or at least in the realms of the standard setting world, relatively quickly. That meant that we couldn't tackle all of the topics that were of interest to non-profit organizations. And the topics that were in the video that you saw were the ones that we haven't prioritized to look at as part of this phase of the INPAG development. So what we have done is really undertaken a fairly high level review, and what we've been looking for mainly is to make sure that what is in those sections is consistent with the sections where we have done major review or we have developed new material. So in the context of income tax, as I said, this is not a topic where we have really done a hard look in terms of anything that might be NPO specific. We really have just updated it to make sure that the terminology is consistent, and to make sure that where we've made changes elsewhere, that's reflected in the section. It is a thorny topic, and in fact, when we were discussing this as we were developing it, there was a question posed by some about, well, actually, are income taxes even relevant for non-profit organizations? But I think, as Tim was just saying, it's so jurisdictionally specific in terms of the tax regime in individual jurisdictions, that, you know, we unlike share-based payments, we think it is appropriate to have guidance there, because taxation is widely applied to non-profits across the globe. But in leaving it there, we haven't really dealt with any NPO specific issues. So just to say that on income tax. On financial instruments, well, I think there's probably some people who would say, well, what is a simple financial instrument? But I think what the key thing is trying to separate out the basic, more common ones associated with cash and simple loan arrangements, with the much more complex types of transactions that quite often go with hedging arrangements, derivatives, and all sorts of swaps and things that people can do. I think our expectation is that I think it's really kind of substance follows form, that if you are if you've got very simple types of transactions, then you don't have to get into the more complicated side of financial instruments. To the question about what happens if there's kind of a weird loan agreement. I guess my answer to that is going to be it depends. If it is just that it has a kind of characteristic that is more common to NPOs but not to other kinds of enterprises, but it's quite simple to understand, then it's probably going to follow a bit. You probably find the guidance that you need in the basic financial instruments, but the more complex the arrangement is, that might not be sufficient. But so it is a bit of a it depends answer. Because I think it really is about the complexity of the transaction, where you need to go to get the guidance on that. But as with income taxes, we really haven't updated this section for anything specific to NPOs. We've adopted pretty much what's there again, but updated for changes to terminology. But that has really been the basis of the update that we've done.
Great, thank you, Karen. And we've got a few more questions to Jobra, I hope that's the correct pronunciation, Jobra, Kasuku's question. Maybe you could clarify what we do and don't cover, because I think we do cover some of the areas that he's raised in his question, but not all.
I didn't quite capture everything that was in Jobra's question. I saw that there was a question there. So, I think just to be really clear, we are talking here about exposure draft 2. We've had exposure draft 1 that covered a number of topics already. Together with exposure draft 2, we've now cumulatively covered 22 sections of INPAG. We haven't yet covered them all, and there is a third exposure draft that is to come in 2024 that will cover all of the remaining sections. So the fact that you haven't seen something today on a particular topic doesn't mean that we're not covering it. It could be that we've already covered it in exposure draft 1, or we are going to cover it in exposure draft 3. And of course, as Tim, you said at the very beginning, there have been a series of webinars over the last couple of weeks, and we've covered a number of topics in those as well. So I think I probably need to be a bit more specific in terms of the relationship to something that's in the topics that are in exposure draft 2, really to be able to answer that any further.
Great, and then Jose's raised a few questions, which maybe I could paraphrase as like, what is the impact of how do we deal with hyperinflation economies, and how does that affect what we're doing around foreign exchange and foreign exchange translation?
Yeah, this was a question I think that came up in the webinar on Tuesday about foreign currency and the relationship with hyperinflation. And we didn't get to it, so it's great that it's been raised today and we've got time to look at it. I mean, they are two separate things in terms of how they work. Obviously, foreign currency translation is looking at the rate to which you exchange your currency for another currency at the date of a transaction. I think it's commonly the case that where particularly where you're moving into a hyperinflationary position, you can get quite significant swings in exchange rates. And I think I was talking on Tuesday about, pragmatic approaches that allow you to average. I think if you're in the situation where you are in hyperinflation or moving into that might be a situation where that's not going to be appropriate, because the changes in exchange rate are too rapid for an average to be used, and you're more likely to have to use the spot rate. But the section on hyperinflation really looks at the value of your assets and liabilities at the the reporting date at the end of the period. And what the guidance says is that for things that are non-monetary, that aren't subject to fair value, then you should put those into the monetary unit that exists on the reporting date. So you have an opportunity effectively to restate and to restate the prior year as well. Obviously, if you've got a monetary asset like cash, it is what it is. So you can't make it any bigger or any smaller than it is. So you wouldn't adjust those, or clearly anything that you've that's been subject to evaluation, so something that you fair valued. But other things you would change. So if you had purchased something in a foreign currency, an asset of some description, you use the exchange rate at the date that you entered into the transaction, and then when it comes to doing your end of year financial reporting, you would then potentially adjust the value of that purchase to reflect the value of your currency, the value of your monetary unit at the reporting date. I hope that makes some sense. I think you're on mute, Tim. Sorry.
Great. And then, Jose, I'll give you, if you want to come back on the chat with any further questions around the foreign currency, please do. I think Hobra's question, which is worth, I think, continue to reiterate, it's a very big question about what are we producing, guidance or standards, Karen, and you're better answering that me. What exactly is the nature of what we're producing?
So I think in terms of the name of what we're producing, it's International Non-Profit Accounting Guidance. So we're certain that's the label that we have put on it. But because we are using the IFRS for SMEs accounting standard as the basis for the guidance that we're producing, we think that it can be adopted effectively as a standard for any jurisdiction should it choose to adopt. So I don't know if I've navigated that question, but we're labeling it guidance, but it is capable because it is based on a standard to be implemented as a standard.
So hopefully that was clear. I think I'm feeling like we've answered the questions that are in the chat here as best we can.
If I could just pick up on a point that has come up in our discussion, and it goes back to the share-based payments. So interesting to see that some of you here today, know of NPOs that have share-based payments, because I think the question has come up. Well, what happens? If I do have share-based payments and there is no guidance in INPAG, which is a great question to ask. I think there's two dimensions to this for me. In terms of a share-based payment, having a share-based payment really comes into its own if it's got value. And a share has value generally when it is traded somehow or other, either privately or publicly, but it is traded. And generally people want to trade shares when there is something in it for them. So there is some kind of right or entitlement that goes with that, particularly rights to distributions or to net assets. The way that we've characterized non-profit organizations, which was back in exposure draft 1, one of the characteristics of an NPO is that there are no there is no distributions externally to the NPO, and that's partly why we ended up where we have in this, because it would, if there are distributions being made, it would almost seem to question whether the organization is a non-profit organization in the first place. But it's really hard to ensure that you've captured every single specific instance, and there are bound to be exceptions. But as a general principle, that's how we were thinking about it. And this is not saying that non-profit organizations can't make surpluses. Yes, they can, but the expectation is that those surpluses are put back into the non-profit organization to benefit the communities that are being served, not to benefit individual private individuals. So that was the first thing. I think the second point related to this is that one of the things that we did in setting up, one of the things we're doing in setting up INPAG is to allow reference to other guidance if there is no guidance in INPAG itself. So we say that if there is no guidance in INPAG, then you should look to IFRS for SMEs or IPSAS to see whether they have got appropriate guidance to use. So even if there is no guidance in INPAG, there is a route to getting guidance elsewhere that people can bring in and rely and work on and still be consistent with the principles that we've got.
Thanks, Karen. There's hopefully quite a quick question to deal with from Gareth Morgan there about INPAG. Is it envisaged to cover if you've got a for-profit subsidiary of your non-profit? Does INPAG extend to that?
I'm going to give another "it depends" answer, because I think it does, and the relationship. If it is a subsidiary and it's 100% owned, then I would expect all of the profits that it makes to go back to the non-profit organization for it to use in meeting its mission and purposes. And so we wouldn't expect there to be any leakage attached to that. And that goes to sharing profits with employees as well. So that's an interesting question, and it's good to see some examples of where that might be and whether that would create issues. So with that in mind, we kind of had thought that where something is more commercially based, that there might be bonus type structures in an organization, but not necessarily profit sharing, because the expectation is that the profits go back to the non-profit organization for it to use in servicing its communities. So it will be really interesting to get people's thoughts on that. But again, in terms, and if a subsidiary is operating commercially and it is 100% owned, I think INPAG can still apply to it, because it kind of meets the characteristics of an NPO in terms of its purposes and what it's been established to do.
And am I right in saying, Karen, that also there'll be some mandatory disclosures about remuneration that's coming in ED3, I think.
Yes,
so
absolutely.
which also might be pertinent to this, because I think you can also have like performance related bonuses and also which profit related, but all of that would need to be disclosed. Well, that that's what we'll be
Yes,
consulting about. What's the level of
absolutely.
disclosure around those
Yes,
arrangements that would be required?
absolutely. And as you quite rightly say, that's some of as part of the proposals that we're developing as part of the exposure draft 3.
Yeah, so as Gareth's saying, so I think there are all these kinds of different arrangements, especially with trading operations, about how you incentivize employees.
Yeah.
Hopefully, we'll deal with it through the combination of ED2 and ED3.
Yeah. And this is where it's so important to get your feedback about practically, what kinds of arrangements exist and in and therefore what kind of guidance is needed to deal with those kinds of arrangements.
But I suppose, in my mind, that's still very fundamentally differently from making a distribution to an investor.
Completely, absolutely. Yeah.
Good. In the absence of any other questions right now, I was just wondering, given there's been so much debate so far, one of the hottest topics has been around revenue, grants and donations. Is there anything in this kind of other topics section that's relevant to revenue or grants and donations in your view?
Yeah. So I think the sections that probably have got most relevance is section 21 on provisions and contingencies, and to a lesser extent section 11 on financial instruments. Taking that one very quickly, I think we just wanted to clarify the impact of grant arrangements, whether they were financial instruments or not. And so we've included in the examples there to try and make clear that the payables and receivables arising from grants would be covered by that section. In section 21 on provisions and contingencies, the principles in that section, hold true, and they kind of underpin actually some of the proposals that we have in the other sections as well. Where we probably are looking for feedback as well is around some of the examples and the appropriateness of examples. So we have modified, I think, pretty much all of the examples to a certain extent, but we have included a new example about onerous grant arrangements, and this kind of ties into the kind of whole revenue foreign currency type discussions that we've had over the last couple of weeks, where we've added in an example of where someone has an obligation to do particular activities, but the amount of grant money doesn't go far enough to cover all of those obligations. And what does the NPO do? And we put an example in there that requires them to create a provision so that they can actually do everything that they need to under the agreement. So there are a couple of touch points, in these topics that are relevant to the grant expenses and revenue sections that we've also exposing as part of exposure draft 2.
Great. So I'm really aware that this is the last of our series of webinars. And so we can't, and many of you have attended more than one of these. So it's one of the key messages we have for you today is that that's been brilliant, but don't forget that we really, really want to have your formal responses. So what we'd like to do is we're going to drop a little form into the chat, because if you're intending to submit a response, we're very keen to help you if you get stuck or need help in any way, because it's really the responses that are so valuable to us in terms of then shaping the final guidance based on the exposure draft. And also it's very, very important to the legitimacy of everything that we're doing, that we get a wide range of responses from across the planet and from different sectors and so on. So please, if if you're not currently thinking of submitting a response, please do. You can make a response as small or as long as you like. We know it's not probably something you may not have done before, but it's not as hard as you might think to submit a response. So if you could download the response template and save that and then fill that in, then we can really try and support you to submit that response. Anything else you wanted to add, Karen, as we draw to a close?
No, I think, as we said, particularly as we get into some of these other topics, where it's great to have examples of things that already exist. Please do share that. That is so helpful for us to kind of bring things to life. And I think we kind of then move on really until the looking ahead to exposure draft 3. So Brian, if you
if you move ahead. Great. So, oops, one back, Brian, sorry. Yeah, so just to remind you where we are. So exposure draft 2, it's open for responses now. Those responses need to be in by the 15th of March. I think that's right. And then in Q2, we expect to launch exposure draft 3. And then the final guidance will be sometime in 2025. What you will get from us in the next few days is a recording, a slide deck, and a survey on today's webinar. And I really want to thank you for joining today and for those of you that have joined previous webinars. It keeps us going, and it keeps us thinking with all the questions that you ask. That's really what's made the guidance as good as it's got to at this stage. I'd like to give a final vote of thanks to Karen, who's fielded all your questions as usual with no worries or flap. And thanks as well to Phil and Nandito, who are on standby in case you need any help. But most of all, thanks for coming, and hope to see you in future IFR for NPO events.
Thank you very much, everyone.